Hello and welcome to another update video about ADA. So the ADA chart is still pushing higher, obviously already on its way to 142. I think after my last video, I think we were just above or just around $1.04. I think we had reached this important 100% Fibonacci extension level. And by the way, I can now remove that 78.6 extension. We don't need this one anymore. So we want to keep it relevant to the Fibonacci levels that are relevant as we climb higher on this Fibonacci ladder. This here is the daily chart. All we're doing at the moment is just filling in the pattern here with a very aggressive third wave apparently that's unfolding. That's the idea, right? That we have completed waves 1 and 2. The wave 2 low was in August. Now there was another higher low here in October, November. Well, and now we're just taking off. So, and this is typical, third wave behavior, I'd say. There are a couple of ways how this can be interpreted, either as an impulse or a diagonal, either as a larger degree third wave or as an A, B, C structure. We have to be very mindful that this top here could be the major top. We will have to see. The bottoming structure isn't the clearest, so different interpretations are possible. But all we need to understand is where's risk high. And at the moment, I think there is still potential for higher prices. The moment when I will get really careful is after this top, right? So I need, first of all, on the larger time frame, this third wave completed, which might reach 142, maybe even 172. These are the next Fib levels. Then I want to see another higher low and another higher high. And after that, I'll get very careful because that would complete a larger three-wave move in an ABC. If things go well, we could get another 4-5, maybe even towards $4. Yeah, maybe higher, but that's not that will have to prove itself. For now, the focus is on higher. There is a key support area on the daily chart that is relevant to keep the overall uptrend alive. That's actually support already for this internal wave 4 here. It's between 60 cents and 84 cents. On the smaller time frame, I have an even, let's say, closer support area. It's even closer to where the price is at the moment based on a microstructure. But that's pretty much what I'm seeing right now. So 142 seems to be the next target. And I will watch for the price to reach it as long as we're holding above 60 cents. It could reach it very directly in a third wave still, within wave C of 3 still, as long as micro support holds. And we track that on the smaller time frame. This is going to be adjusted throughout the day, throughout the weekend, several times. If you want to stay up to date, check out our gold membership. But this is just a sort of an unreliable micro count because people ask me for it. It's really small, the wave degree here, and the micro support for a possibly internal fourth wave corrective pullback is located between 99 cents and $1.07, which makes sense, based on the structure. This could be a 1, 2, 3, 4, 5 off wave 3, then a wave 4, then a wave. This is how we move higher. Bear in mind, this is just a 1 hour chart, just what I showed you on the larger time frame. Now just zoomed in, and the main takeaway here needs to be, ideally we don't break below 99 cents. Well, if we do, the microstructure needs to be adjusted, but it's not critical. So any break below 99 cents would not change, or it wouldn't have any impact on this, right? Which is more meaningful. So it might change maybe support a little bit. I would then have to go back. Okay, maybe I have to draw the fibs from here. It's 94 cents. Even though I like this wave count more for one more high, at least in wave 5 or 3. Then we can add support for this wave 4, which would be measured then, from the red line, right? Because maybe we are already in this wave 4, right? I don't know, probably not yet. Ideally, we stretch a little higher in this internal fifth of a third. But this is just really micro support, and there is not much structure to work with since the market took off on Thursday, right? And as I said, $1.04, that was critical resistance. Now it's broken, so that's good for the bulls, and that's in line with the overall expectation that we should reach our target range here. I've actually highlighted this specifically a few weeks ago on the chart to highlight the different targets for a third wave. I'm talking about this main third wave, yeah? So this is where we want to get to anyway. The first target is nearly reached already, but I don't expect only the minimum to be reached. So I'd like to see it get maybe into the $2 region. I mean, maybe even higher, who knows. But that's, as long as the trend is up and we haven't filled in the pattern, we focus on higher. We have support that keeps us safe. Support can break at any point. But at the moment, the chart suggests still higher prices. And it's just important in these overheated environments to watch the chart very closely, regularly monitor it, right? Especially if position sizes are large. And then we know as soon as the market gives us a signal that something is changing. Okay, that's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.